Welcome back to the channel. Today, we're diving into the best strategies for building wealth during a recession. Look, I get it, the economy is a scary place right now. Everywhere you turn, there's bad news, interest rates are through the roof, and everyone's talking about a recession. But let me tell you something, a recession doesn't have to mean financial ruin. In fact, it can be an opportunity to get ahead. That's why in this video, I'm sharing my top strategies for not only surviving but thriving during a recession. We're talking about building a rock-solid financial foundation that can weather any storm. So, if you're ready to recession-proof your wealth, stick around, because we're just getting started. Alright, let's talk about your investment portfolio. It's a topic that might seem daunting at first, but trust me, it's crucial for your financial well-being. The first rule of recession-proofing your wealth is simple: diversification. This isn't just a buzzword, it's a strategy that can make a significant difference in how your investments perform over time. You've heard it before, but I'm telling you, it's not just some financial jargon, it's your secret weapon against economic downturns. Diversification means spreading your investments across various asset classes to reduce risk. Think of it like this: you wouldn't put all your money into a single stock, right? Because if that stock plummets, your entire investment could be at risk. The same principle applies to your entire portfolio. By diversifying, you spread out your risk and increase your chances of having some investments perform well even if others don't. You need a mix of different asset classes: stocks, which can offer high returns but come with higher risk; bonds, which are generally safer but offer lower returns; and real estate, which can provide both income and potential appreciation. Maybe even some alternative investments like commodities, cryptocurrencies, or peer-to-peer lending. These can add another layer of diversification and potential growth. Why? Because when one sector takes a hit, the others can cushion the blow. For example, if the stock market is down, your bonds or real estate investments might still be performing well. During a recession, some sectors might perform better than others. For instance, consumer staples and healthcare often do well because people still need these essentials. Having a diversified portfolio helps you manage risk and potentially maximize your returns over the long term. It's about finding the right balance that aligns with your financial goals and risk tolerance. Remember, diversification is your friend, especially when the economy gets bumpy. It's like having a financial safety net that can help you navigate through uncertain times and come out stronger on the other side. Now, let's talk about real estate. It's one of those investment avenues that has been around for centuries, and for good reason. Real estate offers a tangible asset that you can see and touch, unlike stocks or bonds, which are just numbers on a screen. I know what you're thinking. Graham, isn't real estate risky during a recession? It's a valid concern, especially when you see headlines about market crashes and economic downturns. And yeah, there's no denying it, real estate can be cyclical. Property values can fluctuate based on a variety of factors like interest rates, economic conditions, and even local developments. But here's the thing, it also has the potential to be incredibly resilient. Over the long term, real estate tends to appreciate in value. Think about all the people who bought homes decades ago and are now sitting on properties worth several times what they paid. Think about it, people always need a place to live, right? Whether it's a single-family home, an apartment, or a condo, housing is a basic necessity. This constant demand provides a level of stability that you won't find in many other investments. Even during a recession, people need housing. In fact, the rental market often becomes more robust during economic downturns as people look for more affordable living options. Plus, recessions can actually create opportunities in real estate. When the market is down, you might find properties at lower prices, making it a buyer's market. Prices might dip, giving you a chance to snag a property at a discount. This can be particularly advantageous if you're looking to invest for the long term. And with interest rates where they are, financing might seem tough, but remember, rates are always changing. Locking in a low rate when the market is favorable can save you a lot of money over the life of a mortgage. Plus, rental yields can actually increase during a recession as more people opt to rent instead of buying. This can provide a steady stream of income, which is particularly valuable during uncertain times. So, if you're strategic about it, real estate can be a solid part of your recession-proof portfolio. Diversifying your investments to include real estate can offer both stability and growth potential, making it a wise choice for those looking to weather economic storms. If you are finding this video to be helpful, don't forget to hit the like button, subscribe to the channel, and share. let's move on to something a little more, shall we say, shiny. Precious metals. Gold, silver, these are often seen as safe haven assets. You know, the kind of stuff people flock to when the economy starts looking shaky. When stock markets are volatile and currencies are fluctuating, investors often turn to these metals as a form of security. And you know what? They've earned that reputation. Over centuries, gold and silver have been trusted by civilizations across the globe. From ancient empires to modern economies, these metals have been a symbol of wealth and stability. Historically, precious metals have held their value, or even increased in value, during periods of economic uncertainty. When paper currencies lose their value due to inflation or other economic factors, gold and silver often retain their purchasing power. Why? Because they're tangible assets. Unlike stocks or bonds, which are essentially pieces of paper or digital entries, precious metals are physical items you can hold in your hand. This tangibility gives them an intrinsic value that isn't easily eroded. They're not tied to the stock market or the whims of central banks. This independence from traditional financial systems makes them a unique and valuable addition to any investment portfolio. Now, I'm not saying you should go all in on gold bars and bury them in your backyard. While it might sound like a fun idea, it's not the most practical approach. Diversification is key in any investment strategy. But having a small allocation to precious metals in your portfolio can act as a hedge against inflation and economic turmoil. Think of it as a safety net, a way to protect your wealth when other investments might be underperforming. It's like an insurance policy for your wealth. Just as you wouldn't drive a car without insurance, it makes sense to have some form of protection for your financial assets. Precious metals can provide that peace of mind, ensuring that a portion of your wealth remains secure, no matter what happens in the broader economy. Alright, let's talk about dividend-paying stocks. These are like the reliable workhorses of your portfolio. See, when you invest in dividend-paying stocks, you're buying a piece of a company that pays out a portion of its profits to shareholders, typically on a quarterly basis. Now, during a recession, some companies might cut their dividends, that's true. But there are also those rock-solid blue-chip companies with a long history of paying dividends, even during tough times. Think of it like this: those dividends are a steady stream of income flowing into your portfolio, regardless of what the market is doing. It's not about getting rich quick, it's about building long-term wealth and weathering any storm. Finally, let's talk about something that's absolutely crucial, especially during a recession: your emergency fund. Look, I can't stress this enough. Having a healthy emergency fund is non-negotiable. This is your financial safety net, your peace of mind when things get rough. We're talking about 3 to 6 months worth of living expenses, maybe even more, tucked away in a high-yield savings account. Now, I know it's tempting to put every spare dollar into investments, but trust me, having that emergency fund will save you a world of stress if you lose your job, face unexpected medical bills, or have a major car repair. It's about having the financial flexibility to navigate those unexpected bumps in the road without derailing your long-term financial goals. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more tips on building wealth. Remember, recessions are a natural part of the economic cycle. They can be challenging, but they don't have to derail your financial future. By taking steps to recession-proof your wealth, you'll be well-positioned to weather the storm and come out stronger on the other side. See you next time. We are not financial advisors. It is important to do your own research. Contact a professional if you are not comfortable making investment decisions on your own. Remember, taking control of your financial future starts with educating yourself. The more you learn, the better prepared you'll be to make informed decisions that align with your goals and risk tolerance. Stay curious, stay informed, and take proactive steps to build and protect your wealth. Thanks again for watching. See you next time.